Thursday, July 3rd, market analysis. Stan Ehrlich. I'm starting out real early this morning because I'm going to hit the road for the 4th of July weekend. I'll be back on Sunday night. I usually start out with stock market indexes and then go to futures and then a few stocks. So we have an not extremely, a very strong market this morning in stock indexes. We have all-time new historic highs on the E-mini popping up significantly. And the way it's acting at the moment is classical bullish action. But we are now overbought for 6 days, substantially so. 85 in the RSI. Danger zone. If this were to jump up more and hit 90 on the RSI, I would start screaming bloody murder. It's about to turn down in a matter of minutes, hours, or that day, which could happen today. I won't be around. I'm just warning you, this would happen super fast, super quick, maybe over the weekend starting on Monday, and look particularly great on the close today. That certainly can be a situation that could develop. So I again keep telling you, and it looks like the wrong thing to say, be going long, a brand new long position under these circumstances. I am very expectant of a sharp downside correction that probably, I think, will bring the market back down to approximately 61, 61.10 in a week or two, and starting to do that very soon. That's the E-mini. The 1-minute chart at the moment has just made new highs again, and we're up 5 points, which is pretty darn good. Not bad. But this is the kind of move up that, again, is just immediately preceding the beginning of something back down. Now, the spider has a gap, another one. This could go down as an exhaustion gap, but it doesn't look like it at the moment. But that's always the case under the circumstances. It also has gaps to close at lower levels from the June 23-24 gap. And I'm expecting the likelihood of the spider to come down to 604-ish. Let's look at the spider 1-minute chart. Obviously, it's just like the E-mini, very strong, very good looking, and what can I say? I only have done this too long to not say something and warn people that this is not the place to be buying. And I know you feel left out. I know you should have bought more a while ago. All of those little things you can say to yourself are typical when markets do what they're doing now. And it's greed, in this case, that causes people to jump in because they feel they're going to be left behind. And typically, you end up buying the high of the rally. Next chart, Qs. Gap up, new historical highs again, overbought. Can't say too much different. We got gaps to close below the market. 1-minute chart looking pretty strong on the average. NASDAQ, also new historic highs, but overbought. No gaps to close on the NQ, but watch out. And also the 1-minute chart just making new highs now, last few minutes, literally, on the NQ. The YM is nowhere near its historic highs, but overbought in a resistance area in general. And same comment across the board here in all of these indexes, except maybe the Russell, which is in a huge important resistance area, just getting a little bit above it for the moment. But another resistance area just above also. The Russell has had so many problems in this wide ballpark area for years that it's gigantic, multi-year big sideways range. Okay, so it's overbought. Watch out. Now, bonds. Bonds did drop down. They tested the trend line. They broke below it, but now they're coming back up above it. And as long as it stays on or above the line is basically good. And I think bonds might hold and start to turn back up again. 10-year notes are almost identical. Drop below support, not a trend line per se, same concept, and is now back into the support area and could easily start to move back up again to new highs. All right, so now we got crude. Remember, I wasn't particularly concerned about the rally yesterday, so here we are starting to slip back down. I think we're going to challenge the lows for the trend in the last 2 weeks and break those lows and drop into this big support area. Next, we've got the head and shoulder top and natural gas. It is working just fine so far. Remember, the downside objective is 1.000000. So, higher high, current tick lower than yesterday's close, down on the day, might have a bearish engulfing, but it's not overbought, so you're not going to get a red bar like the rally high. Red bearish engulfing ER sell signal on the exact rally high after being overbought one day in a resistance area. I told in a previous rally high too. That's an excellent spot for a bearish engulfing ER sell signal. Perfect. And so far it's been working really great. So why would I change my mind? I'm not. I think we're going to have new lows in the next few days. And we'll probably get oversold as we get close to the support area and bounce again. Heating oil. Slightly higher high and a lower quote at the moment, and this big gigantic reversal still is good. And again, I'm looking for a test of support, lower lows, lower than the low we saw June 24th, and down into this rather substantial support area in a week or two. Gold. Big sideways trading range, got oversold, close to support, bounced a little bit, but now we have an outside down day. So now I think support might be in jeopardy. So I think we're going to come down to that support level 32.34 and maybe break below it. The head and shoulder top in silver I was talking about is no more. I'm erasing the markers, the neckline, and the objective. And all we've got now is the usual support and resistance levels to work with. We've got an overbought condition alleviated on a dip, classic, and now starting to work its way back up. This could actually, make new highs. Trend is your friend. And since early April, that's been the trend up, including a buy signal near the bottom, but not quite at the lowest low. I like what I see. Next, platinum. Having a real hard time here. No surprise, just a hair under major resistance, the yellow line, 1450 and small change, and down sharply today. So it looks like it's trying to top out a little. I don't think it's going to be a major top. I'm looking for a move probably down to about 1246. Copper, doji, overbought. Probably pull back down towards support again, 49.95, and maybe a little bit lower. That's probably what it's about to do because of its overbought conditions. And we could swing this resistance line over also. Didn't have much of an effect last time in March. Some, but not that much. And a little bit more currently. Next, we've got grain markets are acting pretty good at the moment. I'm very interested in how far this can carry because the head and shoulder bottom in soybeans is still damn good, and we did have a buy signal on the exact low day last week. And today is a new high since then. If we close over 1075, I would definitely be expecting 11, and 1100 is the neckline of this big pattern that produces a minimum upside objective of 1238. And, well, maybe not quite, but I should lower that just a little bit and actually swing it way over here. Let's call it 1230 plus $1 or two. So soybeans are looking a lot better. They're not overbought. They could break out next week. Well, I wouldn't say break out, but they could get over 1075 on a close and come a lot closer to a breakout. We might even get a breakout in the next week or two above 11. Not, I need a close above 1075 first, of course. Also, soybean oil, which has broken out of a head and shoulder bottom, and that was on a big classic upside gap June 16th. A downside retracement toward the neckline is textbook, and that low was on the June 26th date last week. And we have a higher high today, but we're starting to get a little overbought, very slightly. No particular gaps to come down and close of any consequence. There might be a little something there. And there's no rule that says you can't test the neckline twice, which is pretty rare, or 3 times, which is even more rare. But as long as the only rule here is you're supposed to stay above the neckline, and usually after testing the neckline 1 time, which has already happened, we will be going into new high ground, and that implies a move up to the next resistance area, which starts at about 57.30. That's actually the best call at the moment. That's what I'm expecting. Now, we've got a bullish engulfing yesterday after my YouTube in soybean meal. So it is joining the group. 2 bullish engulfings. One a little prematurely, and yesterday so far so good. Sharp rally, holding at least half of it at the moment. This could be a very important longer-term low. I can't say that with any degree of conviction at the moment. All I'm expecting right now is for it to move back up to resistance at 293, 295, which is a pretty good move. So I'm friendly to meal now as well. Also, we have a turnaround, but no reversals in corn. It already punched the resistance level today. So that was quick. Now what? Well, if it stays here and starts to move up a bit more, obviously the next level of resistance is going to get tested at 434 and maybe even higher. So corn is acting nice. Plus, look at this. We have a low on July 1st. And if you look back in time, there's a low August 27th of last year. And that looks like the possible broad, long-term double bottom maybe. So let's watch out for that. For the moment, all I can say is resistance is being tested. We're not overbought. I think we're going to work our way higher easily in the next few days. Also in wheat, we're coming up a bit more. Right now we're down a few ticks on the day, nothing much. So I'm looking for a test of the resistance area, which is the same thing that we had happen on June 20th. Again, and maybe it'll break above that resistance area also and start something very bullish longer term. That's the beginning of the war. That's the incredible double limit bearish engulfing, top of the market to the exact day, whopper of a swing from limit up to limit down. Huge. Maximum. Okay, stocks. Shell, Doji, inside. We might get caught for a few days going sideways in here. Can't come up with very much of a comment. We're testing a little bit of support, but it's fairly minor. Next, we're poking up into resistance, and we're overbought on Apple. That implies things are going to turn down. That's exactly what I was thinking about the stock market, which is slipping a little bit at the moment, but a little bit. We've got a gap closed yesterday. A little bit more move on Tesla up. Slightly higher momentarily, about 65 cents, big deal, 55 now. So probably slip off a little, test support again. And we're back to NVIDIA, my last chart. Historic highs, I believe. Overbought again. Divergence top potentially. And gaps to close below the market. I think we're going to slip back down to 145 without much of a problem. And that's about it. We've got the E-mini dipping a little at the moment. Ladies and gentlemen, you have a great 4th of July weekend and profitable trading to you.